I'll give it 1 more minute before I start, and then I'll continue. Did anybody take the second orb to the upside? Or London's orb up? What I'm asking. Denisha did, so he's in the upside of that orb. He only took 3 orb. Morning euros. It's 10:10, so people had time to join. I'm gonna go over the lesson for today. Scaling in and why it's important. So, you know, I love to add to trades. This is why also I became a lot more profitable than I used to be. I know how the market moves, but by adding to and scaling into a trade will help you at least to get 50 to 60% more profits in the long term out of trades. This means that we need to trade a lot less, but that we actually have a lot more profits. So my goal for today is how to safely and effectively add to winning trades. Building large profits without increasing risk. So by keeping actually the same amount that we are putting into the market, and actually making sure that we have a nice money management while we're trading into scaling into so. Introduction, what is scaling? We already know what scaling is, of course. That scaling is adding to a winning trade to get actually more profits. The opposite of martingale or averaging down never adds to losers. So I'm gonna go over this one too. So adding to not profitable trades, we will actually do this too. So it's a bit contrary of what stands here because we will add sometimes to not profitable trade, but I'll show you how we can do this. This doesn't happen a lot, of course. This is only when the value gaps happens inside an orb, and we actually had a retest of that gap. We can actually scale out and scale back in at that place. Scaling is the same as act of confidence in your system without emotions. So if you're able to scale into a trade, that means that you actually have confidence that the market will continue to rally to the same place where we actually expected the market to go. Same as today, I expected higher prices. We're still seeing higher prices at this point. So if your setup is 100% valid, so that's a question for all of you. If your setup is 100% valid, would you risk more or less than a normal trade?
Daar op je plaats zitten.
Kijk meekijken, chat. Yeah, normal, okay. Perfect. Yeah, indeed, you always take the normal way, of course. You don't add to trade that's not needed, or you don't risk more because it's 100% AA setup. The only thing that we do is when we don't have a full going with the market, that we can reduce actually. So trading against markets, bigger time frame markets would actually let you reduce, but you never take more than you have to put into a trade, of course, that's normal. Why professional scale in? So why do we want to scale in as an abnormal trader? 80% of traders want to actually trade more than needed, but a person that actually trades a long time doesn't actually trade a lot more. We just add to winning trades so that you actually get a huge profit. The reason why is Pros do the opposite, trade less but scale strong setups. That means that if you can scale 2-3 times in one trade, that you actually can make equal of that you have the whole week done 5 trades or 6 trades in a week. Say that you have one big trade, you can actually make the same profit in that one trade instead of having to do 5-6 trades. The contrary, if you trade orb, yeah, you will have to take them all, so that's a different story of course. 1A setup scaled correctly can equal to a week of small wins. Scaling allows large profits without increasing initial risk. So you always hear me say, if we scale in, then I want you to reduce the amount that you scale in. So once we start with a 1, say that we start with 5% entry, the next time I want you to risk actually 2.5% only. So because our entry comes a little bit higher, that means that we add to the trade. But I also want to make sure that you don't add to your ratio of not profit. So that means if we get stopped, that we actually still stay below that 5% risk of course. So confidence in your edge. So scaling allows a lot, you will get a lot more confidence and you will actually be a lot more happy once we get to the TP2. Scaling is a skill of patience and timing. So I will give you a few entry models how we scale in. Now you know 2 already from me, that's on the retest and when the break of structure actually continues the movement. And I'll show you a few more entries and also explain every entry, how good they are and which one that I actually prefer and which one I'm using at this point. So we got about 4 entryways here. So first of all is breakout confirmation. So this is the most what we do. So this is actually once we got a retest of a 5, say we have a 5 for value gap of 15 minutes or 5 minutes laying there, and we actually break the structure after that retest. This is where most of us scale in. So that's actually when the market's already continuing the movement. Retest of the structure means after we actually had a break of structure, that it retests it. So that means that we actually add on the fair value gap itself. So not when it breaches the high again, but actually on the fair value gap itself again. So I will go over this, how to actually we do this. So that's a retest of the structure, adding when the price retests broken support or resistance. So it doesn't need to break support or resistance, it's just a break of structure with a retest, that's just the same. The Fibonacci retracement add-on, I'll explain this in a minute, how we can do this. So this is actually, once we had a huge rally, you can actually draw a Fibonacci of that rally and you can put it on a 62% would be great, or a 78. You don't need the 0.8 or 0.6. You can actually add on those positions to continue the move to the same direction I was already going. So say that we have an up movement, this last leg up, you can put a fib on that and you can actually see the retracement come back to that 61% and then add on that position stops at that low of that fib and then continue the movement. So that means that we had a retracement for that continuation. That's another way actually that you can do it if you don't have any fair value gaps laying into that gap. And this is also a very nice one for orb trades, by the way. A partial TP with a re-entry. So today that would be a nice play to do on that orb to the downside. I'll explain this actually immediately while I'm here. So today, let me change the screen here for a second. So this was the morning orbs, 8 o'clock. Gonna set it out. I'm gonna show you exactly what I mean by this. So say that we entered right here on that breach. You put your stop at the high. And the market actually started moving a bit down to the downside. So we have a fair value gap right here. So this is scaling out and re-entering actually. So once this market starts moving lower, and we actually see that the market is changing. So we had a doji right here on 3 minute, and we saw that the market maybe could have come back up to that value gap right here. So what could have you done here? If we had, I'm gonna give an example, say that we had 5 contracts inside for a full stop. So this is a 9-point stop, so that would be about $100 for a stop. So say that you entered with 5 contracts. Once you saw this market rallying down, we do nothing. Once the market starts moving back to your entry, we actually reduce 2 contracts. So you actually reduce 2 right here, and then on the tap of that 5 minute for value gap right here, you add those 2 contracts again. So this actually would give you a small bit of profit, not much. It's better if you can do this above an hour, but if it's less, doesn't matter. You actually gained some, say that you sold 2 contracts right here. If you took that one and you re-entered, you made actually 5 points, 5 points actually extra, so that means that you made $10 per contract, so that's about $20 that you made. Doesn't matter. It's actually the retest that matters, because actually you came in with the same amount of contracts once you entered here. Your entry goes up a little bit and you are immediately faster in profit too. This is actually that part what I meant with partial TP and re-entering. You don't always need to take on 1 or 2 hour. This is actually that re-entering. So once we have a confirmation of the orb, it shows us to the downside, we move with it, we reduce 2 contracts, and once we add, we can actually a full R again, or you can add to that same amount of contracts reduce, you can just add them straight back here and then see if the market wants to continue to move. Then you can place your stop at the adding spot once we move back to the same direction. That would reduce almost everything of this trade. So we gave you only this kind of stop, your entry would have gone a little bit up, and if the market started moving the same direction, you would probably get stopped out here, nonetheless. But you could have still reduced a lot more and actually made sure that you had faster profits. If the market does continue lower, you actually have a better entry and you already made a small profit, plus you get faster to your TP what you want to. That's also a way to scale it, by the way. Not an easy one to do, because it lets you do a lot of manually actions directly while you're trading. So I prefer actually this one, retest of a structure. I do this one too on the retest of a structure. So if I have a retest of a structure and then I'm actually trailing this one immediately. So I like to use these two, both of them. Breakout of a structure, I sometimes find it that we are a bit too far in the structure movement. I'm going to show you what I mean while I'm here too. So let me take a 15 over this one. So this is a breakout of a structure right here on this candle. So that means that you would enter actually on the breakout of that structure. Stop would be placed at a low. So you would enter actually on the breakout, stops placed at the low, and then target actually a new high, but you don't know yet where that high will be. The only thing on this one is you can enter directly on the breakout, you can enter on the close of the candle, but that makes that you have a huge stop every time. I prefer to be patient until we have some form of a for value gap laid inside, so that's that retest, and then we can enter on that retest. We got a way better entry then. So this is why I prefer retest of a structure. The breakout, those are most people are trading this on orb, so once we tap a value gap, we continue lower, we break that structure, that's actually the break of structure again. So it has more confirmation, this one has better arc collection. A Fib retracement, I'm going to show one of those two immediately. So that would be your Fibonacci tool is right here. So on the left side of trading view, even on top step, you got them. You press on Fibonacci. You set the 0.7 open and the 6.2. These are already in my. And you draw them on the complete move of the last move. So let me take a look at that 15 minutes. So this was the last draw down. So this is actually the last move that we made. The down candle too. So that would be the complete move from the low of the wick actually to the high of the wick. So this would be the 50% of that move. That's the 72, so 62. So that means if the market comes back down to here, that you long off of it immediately back to the high, and you put your stop at the previous wick. See it the same as a fair value gap, but without it. But just drawing a Fibonacci of the last movement. So this was the last 15-minute candle move. If you want to see a complete move, you can also draw it from here. But I would suggest the last down candle, you count it with the continuation move of the bigger candles beside it. So this was the last retest of a continuation. So this is the last move that we made on a 15-minute base, of course. This is that 50% range. So market wants to tend to come back to that 50% range. Afterwards, that 62 would be an entry level, and that 68 level would be an even better entry level. That's also if there are no fair value gaps that you can actually play and adding to that trade. Are all four of these, do you understand all four of them now? So these are four methods that you can scale into a trade. If somebody doesn't understand one, let me know. I will re-explain because it's very important that you do before I continue here. Okay, great, Nicholas. Emily, Anthony, you understand too? Just to be sure. Before I continue, yes, I understand. Okay, great. No, I'm not. Okay. Break of structure confirmation. I believe you understand, right? Yes. Okay. The retest structure. Do you understand that one? Okay. The Fibonacci. Otherwise I'll explain this one again. No. Okay, great. I'll give a live example, maybe it's better. Where we had that retracement. So here we actually had that. Probably this is actually accurate. Yeah, so this is actually very accurate. We saw that was the last wick take it down, so this was the last move up that we had, and we actually came down to that 62% here, a 62 level. That was also a fair value gap. I'll make my ticks maybe a bit thicker. So how do you draw them? I'm gonna go over that one first. So if we have a momentum of a move, actually the last move is the full movement. So this is actually a movement that you had from that low to that high. You had a complete move. That 62 level of a retest is actually an entry model. So people use those a lot. There is no right or not right way to draw this actually. But you can see this was actually the continuing move. That was actually the last. This was actually the last move. So we retested it, we came down, and this was the last leg up. So if we example, this is a 30-minute candle, so this was the last leg completely up before a bit of consolidation and then moving further down. What did the market do? It consolidated. Did we have value gaps in here? We actually have one right here on a 50% level, but for the rest actually we did not have any value gaps. This is actually a very great example of this. So if you want to enter this continuation, you need to find an entry spot. So where can we find entry spots? That would be for value gaps or break of structures or a retest of a break of a structure. But if we don't have for value gaps, we cannot see what our retest is. So what do people do then? They actually tend to use that Fibonacci tool, and you can see we have a 50% level. That's the same as, you can see this as a demand and supply zone, of course. That would be red. So if you want a long, anything under 50% would be a good entry to long back to that high. Anything above that 50% would not be a very great entry to long to that high. We want a short from here. But we want to see the market is continuing upwards. So we saw here the market was continuing upwards. How do we see this? That the market is moving upwards. First of all, if you watch a 4 hour, we saw that the market was going up without these candles even being here. So the market shows us its hand that actually wants to go up. So if I would recap to here, we can actually see that the market wants to continue. Now, if the market doesn't take that high yet and wants to stall a bit, these points are actually your entry points without needing a new fair value gap or having any direction from where the market should move to. You can see we moved up, we came below that 50%, we acted a bit, we came to that 62 and we reacted off of this one again. So, and then we actually tapped our high, and after that high you can actually see we came all the way back down to that 72 level of 78 level. So you can immediately, once this gets tapped, short of it and put your stop at that last movement of this 30-minute move. So that was a 30-minute move. That was just this move, right? So from here to that move. This one I didn't take that last down part. So just that upper part, that wick to the previous wick, draw it from low to the bottom, from the low to the high, not all the way around, otherwise you get differently move. And then you can actually enter on those 72 levels or 62 levels. Target is actually just the same high, and you get actually an immediately 3.8. If we will hit this every time, of course not, it's not 100% accurate, but it does actually work pretty well. If you took it from that 62 level, you got a 1.6 R out of it. You hit more the 62 level than the 78 level. Remember that, so most of the time 78 will be left alone. 62 is a very accurate level. That would be a way to add to a trade without seeing any footprints of value gaps or anything else laying over it, so that you actually can still take that trade. Let's see if we can hit this. You immediately enter this. This is without thinking either, so that would be actually your entry model. Straight off of this, stop at our low, leave it for a few minutes and then see if it actually plays out, yes or no. Do you understand this now? How to use it? If not, I'm gonna go over this in a few live trades maybe. It will be more clear. So again, you just take your tool. Oh yeah. So you just take your tool, you make sure that you take it to the wicks high, you drag it down. So you take it from your low to the high, sorry. You drag it up, so and you need to be in a discount to a premium. So demand and supply, discount and premium to sell or to buy actually the market to the highs again. If you never used the Fibonacci tool, it's actually a beautiful sign. People use it a lot, Fibonacci's, but I prefer not to. I don't need it actually. I prefer just to watch and be patient for value gaps, for that retest and then continue higher. But you can use both. It's just me giving you examples how you can use it. Just remember those numbers, that 78 and that 62. Remember those. Those are very important actually. If you ever want to use it. On the later stage I will go over all the indicators that you can use, how they be used. These are coming, the movies, but they will not be for the bootcamp itself. They will just be small lessons how to use those tools actually, so that you can just watch them on your own time. I never used them, so I don't believe you actually need any of them. So how do you use a Fibonacci? A Fibonacci, you just use it because you don't get any fair value gaps. The reason why I showed this example was actually because there were no fair value gaps to add off. So if you can see here, that was a 30-minute move up with nothing of fair value gaps inside. So it overlapped everything. So this is actually the only example that you can have that you can use it with. So if you don't have your normal entry model, you can use this as an extra entry model to scale into that trade. Everything here is to scale in. It's not a starting trade. It's to scale into trades. So the only reason that I would use this is actually because we didn't have no entry model at all. So there was nothing here that showed me that I could enter this trade without seeing where the market want to go. Scaling rules and a bit of discipline, of course. A few gold rules that you have to always apply. So only scale if the trade is already in profits. So by a TP partial and a retest of that partial, you can also make sure that you do this. So if you scale into that morning session for today, where Nicholas, you took that trade later, that's actually an adding spot too. But that would be adding to a not profitable trade. So this is why we descale to re-enter on a higher spot, so that you actually get a better entry with a bit of profit. So make sure that you never go over your R risk tolerance when you scale into it. Move SLs to break even or better before adding. We never move our stop loss before adding. We wait until after we add. But if the adding spot is already at a break of structure, then you can. So if we are trading break of structure and that break has been happened, you can move your stops directly to that retest of that previous break of structure. Example, so say that you entered a second trade on a retest. So this was here a break of structure that we had. This was actually a retest of that break of structure, so this was the full break of structure, that was a retest. So say that you entered on the next break of structure instead of the retest. So this was your original trade, scaling up, that's your stop, your first stop, and your second trade was actually right here. You are patient enough. Immediately when you enter this trade, your stop becomes the last grab of liquidity. So this one would be in full profit. This one would have been the stop. So everything from this one immediately goes to break even. This happens only on a break of structure. Be patient until the break of structure comes. Make sure that that second trade, again, is only a half hour risk. That makes it easier to always stay in profits, because this one then got reduced to 0. This one is a half hour, and you actually added to a trade with a half hour risk. If you do not know your plan yet, trade the normal trades first until you are very confident in trading that plan. Okay? That's just something that you really need to do. So again, each add-on must follow the same entry rules. That means if you add, always do it the same way. Don't start adding on a retest and then afterwards add on the break of structure again. Make sure that you have a simple set of rules that you can follow constantly. So I add on the retest of a break of structure, always. So every 15 minutes I add to a trade and I let it go. Once that adding is done, or that break, once we add it to that trade and we get a new break of structure, I move my stop immediately to the last 15-minute swing point. Stops scaling after 2-3 add, don't overstack. Yeah, so same for me, I add 3 times maximum, so after 3 times I don't never add again afterwards. So don't over add to a trade. And the third adding, make sure that you take profit at the last high. So what do I mean by this? Say that we added first trade, second trade. Let me move a bit further. Do we have some retest here? So, okay, stop. We actually didn't have no retest, so say that we do. We had a new structures change that we added here somewhere. So after that third adding, that last high, that should be a target, right here. Don't go swinging for the fence. So make sure that that is then your TP after that third adding. So you had one add, a second add, and a third add. Just take that high. So that would be 3 very beautiful trades immediately taken, and this is not over risking. That's just making sure that you just take profit too after the third high. So once it hits the high again, you immediately take profit. You don't wait. So after adding the third time, your TP should be the high of that last adding spot. This is actually how you can make sure that you can also keep your profits. Example of adding. So when I start with a risk profile, say 5% of your capital that you risked, price moves 1 hour at 0.5%. We don't do this. We make sure that we use one of these entry models and then we add the trades. I do want you to add a half hour the first time, a full hour the first time, and I want you to add, I didn't change this one, 2.5% the next time. I don't want you to add a full risk anymore. Half risk is more than enough. Plus, after the move further up, I want you to move your stop loss immediately so that you don't get more than 1 hour at risk. So you should never, even after adding, be at 7.5 point risk. I don't want that happening. So I want to make sure that you always stay at least with maximum 5% at risk of your total trade, so that you can leave your stop maybe a bit lower then, but make sure you never go above that 1 hour at risk profile even after adding. It's necessary so that we don't over risk in our trades. We want to make sure that we actually can easily if the trade doesn't go correctly, that we definitely can make sure that we can work our way back up. So walk through examples. I've shown a few already, so TradingView, replay, simulated retest. So I've shown you guys already all of the models. So you told me, everybody understands all the models that I've shown? Again, I'm gonna ask it one more time before I continue. Because I demonstrated entry, partial TP, add-on, trail SLs. Yeah, okay, great. So I do want you to make a small exercise and send it to us. Design your personal scaling rulebook. So I want to make sure that you actually have a little bit, that you actually have a full journal, that you know how to add to a trade, when to add to the trade, so that you don't have to overthink it while you're trading yourself, so that you actually immediately can jump into that trade. So pick one of them and stick to it. I'm gonna go over one more time. I use the retest structure and I dare to take the TP and re-entry from it. So I dare to take 2 of them, but I'm used to it. So make sure that you take one and stick to it. If you don't understand the Fibonacci, then don't take it. It's not needed. You can take one of the other 3. This is the most profitable one, together with this one. This is why I take those 2. The 78 is just as profitable as the retest of structure. I just don't use Fibonacci's. That's the reason why. But I prefer to actually use the retest of the structure, because you are immediately in profit. If the trade doesn't go correctly, you're also immediately out of your trade. So make sure that you actually do this and put it into your journal, so you know when to add, how to add, and how much you want to add. So you immediately know what you are going to do. So when is exactly which method that you want to use. How, so when is when you are going to enter in. How is it on the retests or partial, and how much is half hour, of course, that you want to add to a trade. So the next adding spot is again a half hour, so you keep it at a half hour to start, so you get used to it, so it's not too overwhelming. Because if you are with a 2 hour not profit at a stop, not everybody can handle it. Just this way you can. I want to build up your confidence skill and not reduce it, so make sure this is in your trade journal, that you know when, how, and how much. When and how is almost the same. If you want to do both of them, make sure you also enter why you take a few partials off, how you take a few partials off, so that you know, if you do this, that you also know why and how you do this. If you have any problems by filling this in, send me an DM. I will help you fill this in, how actually you can do this in your trading journal. A few common mistakes that people make in trading and in scaling in is adding too early, before the confirmation. So I never want you to add before we actually hit a break of structure or a retest. How can you prevent that? On a retest, you can actually set a limit order. This prevents you from adding too soon. It will only add you directly. Adding and then not looking at your stop loss. So this is also something we do need to watch. So if you add, make sure you never go above 1 hour total stop so that you actually keep the profits that you are in. And treating ads on a gambling movement, so that means that you actually just add at random spots. So make sure you actually add on a correct base, constantly, over and over, repeatable. In the last Q&A, I showed you also how to scale into a pyramid way, so make sure that you also type in how much you add and when to add every time. So if you say I did pyramided, so 3 contracts, 2 contracts, 1 contract, that's okay. Make sure it's in your journal, that you can repeat the process over and over again. The reason why we're actually repeating processes over and over again is because our brain loves continuation movements. So it loves to do constantly over and over the same thing because it recognizes as a habit. This is why we actually do those small things over and over again. Overscaling and turning a good trade into one that you're less confident in. So we never scale in more than 3 times in a trade. That's the maximum that we do. Put that also in your journal. I've tested it. 3 times is a very nice amount of time. Takes. That means that you actually added 1 hour fully to that thing, fully to that trade, and that means a minimum of 4 to 6 contracts that you added to that trade. So if you have 6 extra contracts added to a trade, you actually get a lot of more profits. Yeah. I'll go over the question. So the question was, can you show once more where to put DSL at retest of structure model? Maybe I'll stop this one for a second. So for today, not sure this is the best model, but I can take this one. So this is actually so it's retest of a break of structure. This is not a break of structure, so I can't show you with this one, but I can show it on the leg up actually. I didn't have a gap. Can we see it here? This is actually a good one. So this is org morning session. So here we had so this was org morning session actually. We had a 5-minute close right here. So you should have shorted, so say that we did, and this was our short that we were in. First short. This would actually be adding 2 spots. PP would be actually that low. Here you can add twice. So this is actually the break of structure to the downside, and this is the retest of that break of structure. So there are two ways that we could have done this. First of all, you could have reduced the contract. Once this candle closed, you could have reduced. Reason why? We had two overlapping for value gaps and going straight through it, not closing. So this would have been taking off one contract. That's just before your entry. Your adding spot would have been on that 5 minute for value gap right here. So we had the second 5 minute right here. So this would be your adding spot on the retest. So this would have been that contract back added. The only thing is right here that your stop is still the same spot actually. You cannot place it at any other direction yet until we have confluence that we actually close below this candle. Reason why this candle? First of all, this was the lag up. Once we close below that second candle, you can reduce your stop back to the last grab. We should not come back up here if we want to continue in the same direction. We do need a candle close of a 5 minutes, so you should have been 1, 2, 3, 4, 5, 6 candles or something like that on a sideways movement. You should have been a little bit in profit, a little bit not. Here will be a bit of patience. The only thing that you could have added right here is actually one contract, because you reduced one here, and this is the one contract that you could have added. Maybe a bit more, because we actually reduced, how many points was it? 8 points, and that was a 12 point stop, so we took off 21 points by reducing one contract right here. And we have actually 8 points in this range. So we got about 12 points. So that means 13 points, 21. So that means that you could have added two contracts with the same 1 hour stop. Your entry comes up and you have a better risk to reward. You cannot add to this trade without reducing some contracts. If you add to this trade, you will actually get to minus 1.5 hour. TP would still be the same, of course, nothing further. That would give you a very clear entry. On a retest, you still need to have that same stop until that candle shows us that we have that continuation. Once this 5 minute closes lower than the previous last 5 minutes, we saw that a continuation want to go lower. We can change our stop to that high, both of them, and then let it ride further. Opposite side, again, I'll go over it. So we took, that was a break of structure right here, that retest, that would be the fair value gap, the stop would be that wick the first time. Second entry, we wait again for a break of structure. We have it here. If we have fair value gap, we can take an entry. We actually don't have a 5 minute fair value gap. Let me see if we have a 15. Where is that chart? Okay. So this was a 5 minute break of structure. We did have a 15 minute fair value gap, so that would have been an entry point, a second. Let's go back to that 5. I don't like trading with that, it constantly changes. So we did have a 5 minute after a break of structure right here that we created. We were patient, we waited for that entry model right here. Could have taken a long off of this, that was a 15 minute. Stops can actually be at this retracement then. for continuation. So the first stop was right here. After we created a new fair value gap, we retraced, so that was the entry. The stop of this one should be that protected low. If we continue up higher, we should not come back to this low. Same for the next model. So if we continue, new break of structure right here, right here. Now we do have a 5 minutes to enter, so this is the 5 minutes to enter. We should not come back to this low now. Actually, you can take that one. So this would be the entry. The stop should be placed under this one. So we never come back to that low. If we do come back to that low, that means that the market didn't want to continue higher and wants to take everything out. So here you should have been straight in profit. So this would have been first entry, second entry. So that would be third. Third entry says we take the high. So if that was your entry, that should be your take B. So everything should be stopped as profitable here. That would be 1, 2, 3 trades immediately. So your entry model shows you that your stop should be that previous wick. So again, next break of structure is actually right here. We did have a retracement, a big one actually, and we got stopped out. So 1, 2, 3 ads, you can see that played out beautiful. Did that answer your question, Nicholas? So this was first trade, second trade, stops to that entry. Because we had a break of structure first, right here, we had a retest of that, we should not break that previous one again. If the new break of structure comes, we have a retest of it, we should not go below that wick again. Next time again, if we have a new break of structure, so we didn't have any actually. If we retest, we come back. Yeah, correct. Every last retest of the break of structure before it. So we see a break of structure, so this is a boss. That retest is your next stop. So this was the first break of structure. So this was your first break of structure right here. So that was your last stop. So you entered on this. So this was the break of structure right here. So you entered on a retest the first time. Stops would be at the last swing point. So actually you could have put your stop all the way down here. I wouldn't. I would just use a fair value gap of a 15 minute or a 5 and take my stop at that last wick like a fair value gap is used. So fair value gap tells us we take the previous wick's low as our stop. So that would be this one. So that would be stop 1. Then we have a new break of structure. This stop then should not be validated again. So if this break of structure continues the movement to the same direction, that means that we actually should not come back. So after we did that again, we came back down, we entered on the 15 minute or a 5 minute fair value gap. We want to continue higher. So the stop from this one comes to here. The previous last grab of liquidity before that continuation, again the last grab of liquidity before we continue higher. And the stops actually every time comes on the retest of the break of structure. Yeah, perfect. Make it 1 hour. The second one I would put in 0.775 and then a half hour, so that you pyramid out of it. So make sure that your first entry is always the biggest one, and the ones after it that you're reduced. The reason why is so that your entry stays as low as possible. So if this one is the biggest, say that you entered 1 hour here. So 1 here. The next one, this one would be 0.5. 0.775, and then a 0.5 here. So the measurement from here to here, it will reduce the amount that your entry goes up, because you enter less than the previous one. So you will have maybe 4 contracts here, 3 here, and 2 up here. So this reduces the amount that you actually go up faster. And if it's usable for the pre-orb, yes, it's usable for the pre-orb. I've done it before. So okay, if you ever have done this trading and did something not correct, get just out of the trade. Doesn't matter if it's profitable or not, just get out of the trade, write down what happened incorrect, and go over it again. So make sure that you do your scale ins correctly, because it's very important. It will happen most of the time. Actually 90% you will do it correctly. There is always a possibility that you press a button that wasn't supposed to be there, or you pressed one too much. Make sure that you reduce and go back to the way it's in your plan. It's very important that you change, that you can keep you to your plan, so that you actually can repeat the process over and over again. So to wrap it up, I'm going to give you a little bit of homework, but it's actually very important for yourself. So key takeaways. Scaling is about maximizing winners, never chasing. So we are patient until that point comes, until we have that entry. We do not chase the market. It's the same like when the market moved today, that I could jump back into the market. So I'll give a live example actually of today. You can be honest. It actually hit 3 points off my level that I want to see that happen. So we came in the market today, and I said we will go. I was going long on a 50-minute based. What was that retest? So here that was for value gap. So I wanted to long off of this directly on the retest. So that was a break of structure. We had a retest of that break of structure. I was putting my stop where it should be, 15 minutes for value gap, and then continuing to that 50 level I want to see it happen. The reason why I entered this one was because, first of all, that was a 5R. That was a very beautiful trade. Second of all, that's the model. Third of all, I got stopped here. I could have easily said to myself, okay, I will re-enter it directly and I'll continue anyway. Never do this, people. This is chasing the market then. Be patient until this full model shows again, and then enter again. It doesn't matter if the market moves away from your to your TP, yes or no. It's just trading. It will happen more than once, but just be happy that you saw, that you took the entry, because if you repeat this entry multiple of times, most of the times it works. One out of X amount of times it doesn't work, but that's normal. Trading isn't 100% accurate. We never will be. So Do not chase this. I could have said anywhere along this, oh, I'll take my entry here, put my stop again on the low, and move with the market. Please never do this. No, just never do it. This will make you not profitable because you will have no edge, you will have no entry model, you just chase the market. This is what I meant by don't chasing. So never chase after it. Let it come to you. We are patient traders and we let the market come to our model. Once the model shows, we take the entry, no matter what. That's then being confident in your model and just taking it. Same for Emily. Yeah, so same for Emily today. This was actually, you maybe had a few not good trades. If you had this one good trade, you made everything back that you gave to the market. So with just one trade, not even scaling into this trade. So it's a good model when it presents itself, but it can happen that it's not always correct. Just be okay with it too. If you aren't, take a walk. You had put into your trading plan what you should do. Once you did not have a good trade, go do that. Or take some screen time off, that's okay. You don't need it. Second, timing is confirmation, not hope. So what I mean by this is we actually know when to enter. That's the confirmation. It's not placing our hope on the market that it will do this or that. No, we will just enter it. This is more mechanically. Please do not ever enter a scale in at higher time frame based liquidities. So I don't want you to scale in on London high, New York's high, Asia high. I want you to be patient and maybe wait an extra 5 minutes until you have a new gap. I don't want you to scale in on openings too. So New York Open and London Open we trade. I don't want you to scale on those two either. The reason why is there's a lot of volatility at those points and it can happen that the market changes hand there. So don't scale into those points. So again, time-based liquidities, I don't want you to scale in, and I don't want you to scale in on openings. Those are the only two main key ideas that I have that you don't or won't be able to scale in. So one or two good scaled trades can actually be the same as a very small amount of trades. So I know out of experience that people actually love to trade a lot more. We are quite disciplined here, so I'm very happy to see this, that you are very disciplined in trading already, so this helps you. But a lot of people do love to trade more than once or twice in a day, and they overtrade actually, or trade too much. So one or two good trades of these can actually be the same profit of 20 or 30 small trades. So we actually be patient and disciplined until that trade comes. We take that entry, let it ride, we re-enter, let it ride again. Discipline makes scaling safe. Emotions, emojis, I was gonna say, make it not so smart. So if you feel anxious or you felt overwhelmed and you don't know what to do, don't do it. If you know the entry model and you are easy to scale in, take it. If you don't feel comfortable and you feel a lot of emotions coming up, just scale in with one contract then to get used to it. You don't need to rush to a half hour. If you're not used to it and it's not easy to take a half hour. Take one contract maybe. That's enough. Make sure that you are comfortable in what you're doing at first so that you get confident, and afterwards you can scale extra into it. So make sure it just feels more natural than it gives you any emotions. If it gives you too much emotions, be patient. Maybe backtest it a while before you actually start doing this. It's necessary that you have full control over what you do while you're trading. So, a little bit of homework. I want you to go backtest at least 10 times the model that you are presenting into your trading journal. So I want you to do this for 10 setups where it's possible, of course. share them with us, and that we can see that you at least have tried this, and that you can see and send also the questions that you have off of it. So you will definitely have a question at the beginning, so send me the questions that we know if you have a question where to put stops, like Nicolas just said, or anything else, so how to add, how much to add, where to add exactly. This is how you actually will be able to prevent making small mistakes in a live trade. So this is why we backtest a bit, so we don't do so we only enter with smart way, so that you don't make mistakes, that you actually know what you're doing. It can still happen, but make sure that you backtest at least 10 parts. Mark where the scaling opportunity exists. So show us where you would scale in and why you would scale into, how much you would scale in, put that on that chart. Write down your personal scaling rules in your journal, share that one too with us. So I actually can see if we add trading journals, if I get them, how you add it, where you add it. So we can constantly go over that until you figure out 100% how it works. It's necessary because this will make you so much more profitable than most traders. And share one example with the group in Discord, how you scaled into a trade. You can put that in the bootcamp, you don't need to share that over the full Discord, of course. So those are the 4 things I want you to do. 1, rules in your journal should already halfway be done, so this is quite easy to do. Mark where scaling opportunity exists. You can do this on every trade that we take live too, so mark them out so that you actually see it standing there, so that you actually can show me actually that you understand it. If not, I want to help all of you to make sure that you fully understand this and that you get this out fully. It's necessary that you understand this. And then share one example. Yeah, that's up to you which example that you want to share. A good one or not good one, it doesn't matter. Share both of them maybe. A good and a not good one, so that you actually see sometimes it works and sometimes it doesn't work. What do we do if it doesn't work? Make sure that you know that too. Trading is a plan and not the profit or not profit. Yeah, like you said the other day. And if the first scaling in on a trade is too early, like the risk gets more than 0.7, I wait for the next boss. No. So I'll go over that one too. That's insane how. So you everybody will remember those round numbers from now on. I believe that you can see that's very accurate actually. Hope you keep that one in mind for later. Not a lot of people know this actually. So, Nicolas, say that you scaled in 2 trades, so that you took your first trade right here. Just gonna take a full example. Stops would be here, and your TP is somewhere up. Doesn't matter really. I'm gonna give you a small stop, maybe an entry a bit higher. So your idea is like if you entered. Let's say that you entered your first trade right here, and your second, you had a fair value gap right here, and that you wanted to enter on that fair value gap. It's an example, there is not a fair value gap, but that you wanted to enter on this one. Now, if this stops makes you 1.7, you actually can't enter it. The only way that you can enter this is actually when the market already went up, that you could reduce risk and then enter it. So that would be this example. So TP partial with a re-entry. So that would be once the market actually pushed up, but here it actually didn't, so maybe say that we actually entered somewhere here. So that means that the market is a bit lower. So once the market shows us that it wants to go higher, you could have taken there. So the market showed us that it wanted to go higher. We took a break of structure right here. And we entered on that push of this big candle. We saw the market move and we saw a fair value gap being created. Can you re-enter here? No, you can't. Actually, you can't. You just have to be patient on the next one. The only way that you could, if you reduced contracts in this candle on your entry, that you reduced and be patient for that entry. So that this is something that you could have put into your plan, that you actually, when it comes to your entry or just above it, if you have like 5 contracts in, that you actually take 2 off immediately and that you re-enter those 2 right here on that fair value gap. That's the only way that you actually can do it with keeping the risk at the same level without adding to that risk. So again, if you see a 5-minute fair value gap being created while you actually entered already, and you see the market come back to your entry, you can reduce 2 contracts and be patient for the fair value gap. The downside about this is if the market doesn't tap that and continues immediately off of that, that you have 2 contracts less in it. So you have to be okay with both entries. So first of all, if you take 2 off, you get a better entry. That's the good thing about it. But if you take 2 off and say that we are here and the market didn't come back and immediately rallied off, you actually reduce 2 contracts with no profit, or just a small profit. With those 2, you have to be okay with it. So that's up to you. If you want to do this, or you just be patient for the next break of structure. So this would be the next break of structure right here. And then be patient for a new fair value gap that was here, didn't get tapped. Here you didn't get tapped. Here we did get tapped, so we did have a new fair value gap right here. You could have entered then here. And your stop should be then at that low. So this would be the last swing point before we go up, last swing point before we go up. So that would be, if you're the last one, so that you entered full. That's a big stop, I know, but that's the stop you should take. Target would be the high, because first, second, third time. Is this understandable now? Yeah, anytime. Love to help. Okay, so I'll send the PDF of this one directly into Discord. I'll do this right away so that you have it. I also added in Discord a small PDF which one was it? Terminology. So that you can actually see if it's something that you didn't understand. Upload, lesson 8. It's actually lesson 7, but yeah. I don't got the lesson. But did I not put the previous lesson inside? Oh. Did I not remember? Well, I'm gonna stop my recording for a second.